All right, good morning, everyone. Friday morning. It's a couple hours into the market trading. We're going to do a kind of a in-session market video while stocks are still trading, and then I'll either do a video at the end of today or tomorrow where I'll cover the weekly charts. So we're going to get into these charts. The first thing I want to point out is this Tesla trade idea that I floated yesterday, and so far I still like it. It's not bad. Let's look at what we got going on here with Tesla. So first off, technically Tesla, here's your uptrend line that I can make on Tesla going back to the March lows, and you've got a reaction right here, reaction there, reaction there, reaction there. So 4 reactions, really 5 because we got 1 right there. 5 reactions, and then right here is kind of where we're at currently. Now we undercut that trend line, this red line right here, this uptrend line right there. That's your trend line. We broke down, not that impulsively, and we did a back test. We've been back testing basically the last couple days. Now you can see that we back tested, dropped, and then today they actually recovered it. They recovered the support line, but just barely. So if we break down here into the close, then that I think is going to be your whipsaw signal or your bull trap. And then that should set in motion this thing to start moving a lot lower. Now, if they can hold this and close above support, then if you look at the daily chart, zooming into the daily, you can see right now we're just back testing this trend line. And this is an objective area to essentially short on the daily chart. Now, if they can close it back above here, maybe up around this 410 level, and get a solid daily close back above support, then any continuation to the upside is just more and more confirmation that this thing's not ready to break down, and this was a bear trap. So that's why I like taking the short right in this area. But much higher, especially with daily closes, and it would be time, at least for me, to get out of the trade and take a small loss. So we'll see how this thing closes out the day, but as of right now on the hourly, it's still in the area where I think you could get an impulsive failure. Look for some sort of impulsive action, impulsive failure, an impulsive breakdown back below that level should set the momentum to the downside in motion. So that's what I see on this one. The only other thing I think you could point out on the daily chart here is, these negative divergences that were in place back here. You really put in the negative divergence right about here. This was a divergent high where you didn't make a new high, you made an equal high to the previous high, but the price was substantially higher. So here's your momentum, and you had a high right here, and then when you made a equal high in the momentum indicators, your price was actually about 60% higher. So pretty substantial divergent high. And so I'm looking for some of this momentum, this upside momentum, to unwind. And I think when it starts to unwind, it's going to come quickly. And that's why, I think we'll just chop sideways. And, this might not just sell off right away. We might just grind sideways for a little bit. Could do a back test, but maybe we'll grind sideways and then gap down and roll over. But as of right now, I still like it to the short side. I still think this is an objective area to short. And it doesn't mean it's going to work. But if they can't recover this on a daily close, then it could start to work. And tech is, showing some strength today. So we've had a couple series of higher lows. You can see we had a low right here, a slightly higher low. And then today when it dipped, it was a higher low. So could be seeing this rally up to this 275 that I was looking for earlier that we just didn't get. Doesn't mean it has to be, but it could be. And as of right now, I'm a little unsure of where the near-term direction in Qs is going to be. Whether it's going to be a rally up to 275 or potentially higher. We could get up to 281, and if we break above that, then I would look. It's probably going to be a full back test. So that's all possible. or we could break down here. So because I'm not exactly sure short term where things are going, I decided to go flat on my Q short. I covered my Q short today, and just go flat. I can always jump back in if we get continued downward pressure, or if I start to see, a solid rally, I could always go long and look for this 275 or higher. But as of right now, for today, I'm going to go flat, and we're probably not going to go anywhere into the close today. They'll probably just keep it right around these levels and keep us guessing over the weekend. And because, that's 2 days over the weekend that I don't know what's going to happen, I feel comfortable being flat. Again, for me, I got short right here on the breakdown of this level. So it's about a 10% gain in the triple Qs so far. And not a bad trade. And I'll just wait to see what comes next. I just need a little more information to give me, to let me know where the short-term direction is going to be. Longer term, I still think we're going down. Again, I want to be very clear about that. Longer term, being, months basically. I'm not going to go out and say years, but months basically. I still think we're heading down, and I think we're heading substantially lower. I think we're, over time, eventually, I think you're going to see a 225 print or something like that on the triple Qs. And I'm not really seeing volatility sell off too bad either. I mean, we're selling a little bit right now, but for the most part, not selling off that impulsively. So that tells me that people are buying some protection, and they're definitely buying some protection and thinking that potentially we're going to get another leg down. So it doesn't mean it's going to happen. And again, I'm not sure in the short term. If this wants to roll over and sell down to this 15 area or some kind of a back test, that's where I'd look to be adding to this trade here. SPY here. On the daily chart, clearly we're in a downtrend now. You can see this was your uptrend, your major trend for 2020. We broke that trend, and now we've created a new downtrend. So we have not broken this downtrend. If I go to the hourly, I only have 2 data points on the top end of the trend line as of right now. So need a third reaction to give us that clear trend. So we can't count this as being the top of the trend line as of right now. But once we get that third reaction, we'll have that top of the trend. But we are making lower lows and lower highs as we work our way lower. So that's the definition of a downtrend. We just need to find our trend lines on the upside. The downside, we've got a pretty clear idea of where the support is within this downtrend. So in the short term, we could go higher, tag this, up here, or even, break a little higher. In the longer term, I think, that we're heading lower in the SPY. Okay, the dollar is continuing to rise. Looks like it's going to do a back test of this bearish rising wedge here. So we had this bearish rising wedge, and this is short-term stuff, but we had a bearish rising wedge. We broke down, kind of drifted sideways. Now we're doing a back test. So the dollar might be topping out in the short term. Maybe we get a sell-off in the dollar back down to this 93.70. But I still think, that's kind of short-term, kind of a sell-off down. But I think at that point, that would be support. And then the dollar is going to rise up to this 95, 50, 70 level, somewhere right around there. I definitely think that is a high probability direction there. Even if we get a pullback down to this 90, it's about 93.75 first. And so let's look at gold, and then we'll look at silver, because silver's had a pretty good sell-off. So I'm starting to get interested in looking at buying it, and so we'll kind of spot that out. Gold. So gold's kind of hanging in there. You can see that we're just hanging sideways. The dollar is rising, but gold's showing some strength. You can tell people are short-term buying gold. So gold could, in the short term, I have no idea where gold's going. It could backtest up to this broken trend line right here at 1950 and then roll over, or it could just roll over. I think in the medium term or at some point in time pretty soon, we're getting down to this 1790. That's the only level that I ultimately have a higher confidence on, is that we're going to see a 1790 print. But how we get there, I'm just not exactly sure. So I'll just leave it at that. Silver. All right, so silver, here's what I see in silver. This is SLV, tracks silver, it's paper silver, but ultimately, that's what we're looking at is the silver derivatives. And you've got these two gaps here. Silver got way ahead of itself. If you look on the RSI, I mean, silver was up around 85 on the RSI when it was at its peak right here. And that is about the top of where you see silver start to top out. If I roll back here, you can see here was an 85 print. That was followed by a big sell-off there. We had an 85 print, 84 print right here, and that was followed by a sell-off right there. That was about a 25% sell-off. And there's another one, right? That was 88 or 89, and that was basically the peak right up here. That was the big bear market, a 72% drop. So anyways, on the RSI, silver got way ahead of itself and was really overbought. That's come down now. And now we're actually getting near the levels of being oversold on the RSI. So the bullish, kind of that overextension of bullish momentum has now really dissolved, and we're now looking at, relatively good valuations. So we have here, it looks like it has held this support. I had this marked out. Where do I get this one from? Yeah, this one, we got some gaps in here. I've had a resistance right there and a gap right here, a reaction. So silver found some support right there at 2047, bouncing a little bit. But what I'm looking for is really a buy area on these gap fills right here. So if we can get, here it is, here's one level. I don't know why I have it green, but I do. Probably just to show I'm interested in buying it. But there's a gap right there at 1985. And then we have another gap right there at 1860. So what I'd like to see, doesn't mean it's going to happen, but what I think will happen is we're going to get some sort of big move down in silver, some washout move, run it all the way down, backfill this gap here at 1850. That's where I'm looking to be a buyer, right there at 1850. We should be pretty oversold at that point, right into gap support, and that looks good to me. So whether we get that flush out move, I don't know, but that would be an objective area to be buying if we do. Someone wanted me to point out Zoom here, and honestly, I don't see anything bearish on this. There's nothing, I can't make a case for shorting this thing or even anything going on. The only thing I see here is we do have a bearish rising wedge right here. Not the cleanest wedge, but it is a wedge. And we broke to the upside, and we've been just chopping around up here. This could go higher, but usually when you're on the upper end of a bearish rising wedge like this being a bearish pattern, this is usually the fake out move or the bull trap. And usually you see an impulsive breakdown to the bottom of the wedge, and then usually start, kind of working your way lower. So that's usually what happens. However, there's no divergences in the momentum indicators. We haven't broken trendline support. In general, I just don't see anything bearish, so I'm going to just kind of let that one do its thing. Oh, just to point this out, since we don't have 3 data points to make an upper trend line on the SPY, you can use the futures. Futures trade pretty much 24/7. So usually you'll have some more data points, and that's always a good way to find your trend lines through the futures. So ES is a way to do it, and you can see we're just kind of climbing up towards the upper end of this trend line that we have. So it could, as of right now, we're in a downtrend. If it's going to break higher, then that would set in stage a potential, run higher in the SPY and maybe even a back test. But as of now, we're just kind of running up into resistance. Across the various sectors, XLV, I don't see anything today saying that this is the bottom of this down move. We're just getting a little bit of buying. No kind of doji reversal candles or anything. So I think we head lower, heading, I think we're going to tag this 97 on XLV. XLF, same thing. I don't see anything telling me that this is the end of the selling. You know, we're going to have little bounces along the way. We could bounce up to this 23.73, but ultimately I don't see any candles that tell me on this daily chart that we're done selling. And I think that ultimately we had lower in XLF. And those are two important sectors. XLK, really the same thing. I don't see anything telling me in XLK that this is the end of the selling. There's no reversal candles or anything. So we're getting a lot of chop here in tech, but this tells me that over time we're going to go lower, you know, in the longer term. Okay, DraftKings could be a good short here, pretty coming up soon. I'd prefer to see a full back test of this trend line. This is a daily chart here on DraftKings. If I go to the hourly, I'll point this out. So, a couple things that I really like about this. One, negative divergence, telling me that momentum is changing. Even though you can't see it in price, or you couldn't, I guess, up here, you could see it in the momentum. It was fading. So these were divergent highs. The prices were making higher highs, and the momentum was making lower lows, diverging, telling you momentum was about to fade or change. And then we broke the trend line right here. So we broke, sold off. We're getting a kickback rally. So if we can get a full back test, maybe up here around 57.50 or something like that, that would be most likely, you know, a divergent high, again, a new divergent high, and a full back test, setting up kind of the ideal spot to take a short position. So I'll be watching for that. If we can get up there around that level, that's going to be a good high probability trade, and probably for a move down to, I'll have to kind of tighten it up and look at some of these levels, but you know, probably you can see we had some resistance, you know, maybe right in there. So, you know, maybe down to this 43.70 for our first target, and I'll kind of look at some other targets. But if we get it from way up here, that's a 24% drawdown. So looking for that one, and I'll point it out if I see it. I don't really see much else. IWM could be along here. This is interesting. So here's IWM. We have this big sideways trading range. If I go to the daily, shows a little clearer, but big sideways trading range that we've had for really, you know, years, and we had two undercuts of that range. This, the Fed stepped in and saved the market, and again, the Fed stepped in and saved the market again. And you can see as I zoom in, we undercut the range right here. If it can hold and get a daily close back above this level, then this could be a long, and we could go to the top of the range again, or maybe just the midpoint of the range. There's, you know, it could just be good for a bounce trade. But so far, it looks like it's trying to hold, and so we'll see how the day closes. This could be a long. We do have. Let's look to see if we have any. Yeah, I don't see bullish divergence though in the momentum. So that is one thing. I'm not seeing any kind of divergence. So that one gives me pause, I guess, because I don't have the momentum indicators. It's not the cleanest setup, but I wanted to point it out. So that's really all I got for this video. Couple ideas, and you know, a little bit of undecided price action right now, I suppose. So gonna wait for some more information, and I'll catch you guys on the next one.